Well, friends, the election is over. And so the question is, now what? We've been off for a little bit doing weekly outlooks or daily outlooks just to get through this period. And so now that we're past it, I think it's time to look at some markets. And so I want to spend some time. Markets already open this morning, and just kind of walk through kind of where we are, what's happened in the last couple of weeks, and what we're looking for as we go into the end of the year. Hey, if we've not met, I'm Josh. I'm the founder of TRADEWITHPROFILE. We're a skill development firm. So we come alongside developing traders and help them put together a playbook of setups that they can express in their trading business using the profile as the key analysis tool. It's a way to organize market information that we get purely from what we see in the market. So trying to stay outside of macro stories and such like that, but really just looking at, okay, what's happening right now and what does that give us insight into what might likely happen next. So we're going to look at several markets, futures market specifically. We'll get a plan for the week. We'll kind of talk about last week. We'll talk about where we are in the election and the rest of the year, and then we'll get you on your merry way. Okay. So with that, let's jump in and start going after it, shall we? So we're going to go look real quickly here. And we're going to start with this chart. So this is the SPY, the ETF that tracks the S&P 500. And we're post the election. So a couple things that have happened this year that have been unique in kind of, years where we've had election seasons. Typically, election years are sideways. There's not a lot of directional conviction. This year just blew that all out of the water. I mean, the expected high for the year was actually way back here. We've been consistently holding like the trailing VWAPs for FOMC and rate cuts. We did get a rate cut, and then you can see the big gap and push from the election that corresponded with a quick tightening of the VIX curve and then a reversion of that. So this continues to be a pretty good timing tool of what's going to happen in markets as you go into a binary event like an election. You don't know what the outcome is going to be. Everyone hedges up, but then if you get past that and no one else adds to that, those hedges unwind, and then that takes us higher. And so you can see how that has taken us higher. So then the question is, like, what does that pertain for the rest of the year? So if we look purely at the S&P 500, right now, there's nothing in the way for this thing to continue to go higher into the rest of the year. And so if from a macro narrative standpoint, I just got done talking about how, not talking about the macro stuff, but from a narrative standpoint of kind of where we're at now in the cycle, some things to consider. One is, I had anticipated that we were going to see a correction by price heading into the election. We did not. Sometimes you see a correction, but a correction by time. And that's essentially what we did. We balanced for several months kind of in the same prices. And so that's the same thing as a correction by price. It's just correcting by time. That set up the stage for the push higher. We've now had that election risk has unwound. So markets are going back towards complacency. That's leading to higher prices. One of the things that was a driver for potential weakness going to the election was that there was, along with earnings seasons, a blackout on corporations buying their stock back. That's now gone. So we're out of that. Looks like with the Trump administration that the tax cuts of 2016 will be extended. They were set to expire in 2025. Corporations will like that. And then that sets us up for a ramp into the end of the year. Primarily because now that we're past that, there is some end of the year structural aspects that will be in play. And so as we go back here and look at the chart, just looking at where options are priced now, looks like 620 is kind of the key objective to the end of the year. So it could be quite a ramp. We do have a couple other catalysts along the way as we get into the end of the year, but it's really one of the more bullish times of the year. So getting through earnings and not seeing something really break. We do have NVIDIA earnings coming up. We'll have to play with that. We do have one more FOMC and potential rate cut. We just got that last rate cut. And then we do have triple witching expiration in December. But again, all of that leads us higher. I would say now, if something was to break, where might that break? Unless we could get back below this prior all-time high, which is at 586, and even if we could get back and revisit down here, unless we could get below where we had that September rate cut come in, as well as the Jackson Hole rate cut, unless we get back below those prices, there's really no risk to the buyer. So look for the auction to loft, balance, and accept those prices, and then keep ramping higher. Okay, so that's what we're looking at overall as we go in. So now let's talk about kind of the calendar for this week, and what we've got on deck, so that we can get an expectation for the week ahead, and what we have to look forward to there. So a couple things. It is, if we get the right calendar. So we do have Monday 11th, it's Veterans Day. So banks are closed. Markets are still open, but we could see smaller volume from that. Tuesday, we've got some Fed speak. We do have an OPEC meeting to be mindful of. We have CPI on Wednesday. That's one of the key things that we're looking at. But as the inflation story has become less and less of a deal, I think, at least for the time being, you're not seeing the big moves that we saw a year and a half ago. That may come back in 2025, especially if we apply tariffs. But right now, not a big deal. More Fed speak. We do have jobless claims, PPI, kind of clustered together on Thursday. Note that if you trade crude, we do have crude inventories on Thursday, and that's because of the holiday on Monday. We got Powell speaking on Thursday, and then Friday we have some retail sales, like a cluster of minor economic releases, but primarily we have OPEX. Okay, so we have monthly OPEX. So that was another thing that drove the move higher. Last week was a Vanna week. This week is OPEX. So I could see a little bit of a move or a jostle, but barring anything unforeseen, we're looking to hold these prices higher. All right. So with that, let's also now look at the quick sheet and get an idea of what other ideas other than kind of our core products we might pay attention to this week. We do have treasuries. Looks like they're balanced. Let's talk about Bitcoin real quick, because that is one that has really ramped higher. You can see the big push, and we're looking here. These are monthly profiles with weeklies overlaid on top of them. So we've pushed away from a lot of inventory. So do I think that Bitcoin's done going higher? No, I do not. Do I want to find some liquidations to buy into? Yes. I think really in anything back toward this breakout. So, 77K, back in this direction and pushing. What are we looking towards now? I think you got to start thinking about 90 to 100K. Those have been big psychological benchmarks that have been out there for a while. If you're looking to hold this, for some, period of time, but you can see the push from balance here, and now they've come up here and balanced. So what's likely to happen is that the auction might pull back in this direction and then come back up in here, trying to pull value higher. That's kind of what you really need. So if you feel like, oh my gosh, I've missed out, I need to buy it. Well, if you buy here, you might get trapped. Let the thing balance some more, and then you can get into it. Let's see what Ethereum's doing. Very similar profile. So big ramp. Let them balance. Look and see if we can come down, maybe test 31.29, and then back up before we look to express on that. The other one on there was gold. Gold pushing lower, and this is to start the week. So let's watch. In fact, let's put an alert if gold gets back above 26.55. If not, we've got 26.10. And if that fails, 25.40 is a spot that it could go back to. But looking for gold to stay in this upper range again, unless they can't get back inside of last week's ranges. So we're inside of last month's ranges. We'll see what happens if we test last month's low, see if that reacts or not. but ultimately he's looking for gold to stay in this higher area. Okay, so that's it for kind of some of the ancillary products. Let's look at our core products as we start the week, and the first one with that being S&P futures. Okay, so let's jump over to that chart and pull up the trade plan for that. Okay, so let's talk about last week. Last week we came into the election. We had an inverted VIX curve. We had an FOMC. We closed above all of that, and we had some pretty significant gaps. Okay, so if we zoom out and look, we can see here's the gap from the election, and then one time framing. Gang, this is the first time we've seen significant conviction like this in almost 2 years. We just have not seen this type of broad conviction, and I think that's finally now we have some directional conviction. What's the expectation this week? All right, so if last week we ramped up here and we held, what are some things to look for this week, and where we're looking to go? Let's look at the weekly chart here real quick. Okay, so from the expected high for the week is around 61.25 for the week. Now for the month, we're looking at 6,100, but that 6,100 is a pretty significant reference up there above the 60.50. 60.22 is going to be kind of the key pivot. Now, a couple things to watch is the trailing FOMCs from both the election and the FOMC, or the trailing VWAPs from election and FOMC. As long as we stay north of last month's high, so if we liquidate early in the week, look for that to return back up here, and then that's a push. Or we can continue to balance in this direction. We have kind of, I think the first place to look to the downside would be right around that 5,800, or I'm sorry, 59.75 as a spot to hold and push higher. If we go higher first, what's that going to do to us from a posture standpoint in terms of where inventory is? If the 5 days here and the 20-day is here and price is here, then we either will go sideways or we'll revert back. It could be that we push up higher and then we get Powell and then we come back here. But continue to watch and monitor these two prices specifically as we move higher. For today, we're here on a Monday. Markets have already opened. You notice that the ES is actually pulling lower. Probably going to come in here and test 69.50 or 69.25. Why? Because value, even though it was a trend day higher, value did not follow price. So often the auction has to come back and test that first before it can push higher. We do already have new weekly highs. But watch and see if we push here. We'd have to accept below 60.17 to be able to test any lower, but should push in that direction. That is kind of the idea for the ES. Let's look real quick at the NASDAQ and jump over here. Going to be a similar story. Also had several gaps. As the auction pushed away from the election, you can see we're above that election VWAP. We held the FOMC VWAP. And here's November's non-farm payrolls, the last CPI. So all of the last major references, we've stayed above all of those, and we'll be supportive. So if we push lower early in the week, look for that to rally later in the week. If we push higher, then that's going to put in a similar situation when you have price 5-day and then 20-day. Which would mean we would either balance or push back in this direction off of Powell and OPEX. So, given that we are, fairly complacent now in the curve, watch for that complacency if it pushes up in the end of the week, that we could see it tighten back again. Same deal with the NASDAQ as the ES, unless we got back below 20,700. I don't see really any risk to buyers. So, we could push here early in the week, but look for that to come back up towards 21,220. That's so hard. And then this is kind of the key pivot to push in that direction. For Monday here, we had a rotational day on Friday. We do have new highs. We're testing Friday's VPOC. Let's see if we get back above that. Then we can rotate back and push this way. Otherwise, if we get below, as we are testing what I would call the pre-IB bias right now, that could open the door for us to test, in this direction. So let's watch. Again, that's not a turn in the market in any way. That's just an opportunity for us to get better trade location, quite honestly. So we do have some holes to fill in the auction. Be aware of that, but we're just going to carry forward all of that right now. If we can get below this, we do have gaps to close. We do have naked points of control. We do have structure to clean up. But the further away you are from those prices, the less likely they're going to pull. We're just going to carry them forward and then see if that gets us to a place that we want to be down the road. Okay. All right. Now let's look at the Russell real quick and see what we got going on there. Also a similar story, but really, really powerful breakout here in the Russell. If we look at just some monthly profiles, you can see how we have really moved out of a pretty substantial balance area that we had been in. So this is the move from balance. So, unless we saw acceptance back below 2350, look for the Russell to keep pushing higher and bouncing. We did pull the 5-day up, so 2400-ish. It's going to be kind of key for the week. We could see a move back to test and then push here, or we could push up towards the weekly expected high around 2466 and then back. Again, pushing higher from here gives you an extreme posture. That's not bearish. It just means that we're likely to either go sideways or back to value. So be aware of that as we look at the TPO chart here real quick. Okay, we're gapping higher here on a Monday, so gap rules are in play. As long as the gap doesn't close in the first hour, we'll look for it to continue to rotate around here and ultimately take out the IB high and push towards our daily expected high, which I think we have already achieved. Yeah, so the daily expected high was already up here at 2437, so we're above that. Do have some singles overnight, so be mindful of that. We do have make a point of control here. Could, if we see this gap fail, watch 2418 to be responsive. Otherwise, we're going to go and traverse across this range. It can be short-term bearish, but again, ultimately, overall, we're pretty bullish on equities as we go into the end of the year. And then finally, let's look at crude and see what we got going on in that space. Okay. Crude has been in a kind of a range inside of a range. All right. So we can see a range here of prices that we've been in inside of a larger range. Last week, we closed, the prior week was kind of one of these weeks. We got higher prices as expected, and we established a range from 70.50 to 250. Okay. You can see, and value right here at 71.50. So it's balanced on multiple time frames. What does that mean? It means that the market is looking for a move, and when you're inside of a range, that means it's going to move towards the extremes. So that means if we are, out of this area, we'd go up here, we're going to go here. We did have a trend day lower on Friday. So that means that we'd look for, lower prices. And you can see here as this market is already open, big gap lower. So here's Friday's low, here's Monday's high. So we got a big gap here. Gap rules are in play. As long as the gap holds, we stay below VWAP. We'd look for the auction to rotate. We have done a good job already of accepting lower prices, likely not done. Where does that put us on path for this week? We're looking to test back towards the bottom of this bracket. So 67.50, 60 area would be a good and reasonable place for the auction to test. Now, if I look at that at a monthly basis, we're inside of last month's prices, and we're below last week's EIA release up here at 71 monthly VWAP. So as long as we're kind of below these composites, unless we can get back above here, look for the auction to test first at 67.50 and then ultimately down here could ultimately test that by the end of the month. We'll see. We are in kind of the time of the year where you're not going to get seasonally higher oil prices because demand's not as high, right? We're going into a less traveled period of the year. So that's kind of what we're looking for this week. We'll look at this each day as the week goes on and see what we've got around us. Couple things, just to be mindful of. Remember that not every price is relevant or actionable in the auction, right? Some prices are more important than others. So be mindful of that. Also, a reminder that all of this it sets the context for what playbook trades may be in play. So, I walk through this whole deal to look at larger macro prices within the auction and in the inventory, but ultimately I'm looking for places that I can express a playbook trade. And we're going to be talking a lot about playbook trades to close the year out. And a playbook trade is a trade that answers 4 questions. The first one being, what's the opportunity or the target? What am I willing to risk to get to that target? What would tell me that I'm right? And then finally, what would tell me that I'm wrong? So it's our conviction that if you don't have the answers to these 4 questions, you don't have a trade. You have a gamble, and gambles can be fun. Gambles don't build a business. So let's talk about using defined risk around reasonable expectations within a market. So for example, just to give us an idea of what that might look like, let's look at a playbook trade that's in play potentially right now. So we're going to go right back here to crude oil. Okay, so I just talked about the fact that we have a gap open. Okay, so this is an open auction outside range. Open auction outside range. Now we've already exhausted the expected range for the product, but how could I express this? I do have a naked point of control at 68.28, and I've got the VWAP here. So the auction should not be able to get back above this. So I have a playbook trade, which is a directional open go with. And that says that if the gap holds, if I can test up to a VWAP and then the auction rejects off of that, that could be a short. So I have developed value here. I'm looking for 68.28 and lower. What I want to look for is I want to look for responsive rallies that don't get above the VWAP to be short for target. So target would be here. I'm looking to enter, somewhere in here, and then my stop would be there. Okay, that's a playbook trade. So now I got to let the auction come to me, right? So if it gets those prices, then I can look to express that. I know what this is called. I can track this. I know the performance on that, and rinse and repeat. That's a playbook trade. It's when there's so much that's random about markets and you don't have control over, having 4-question playbook trades is a way of exerting control over the market. And that's going to be crucial to last in this business. Okay. So with that, I'll leave you to the rest of the week. We'll be back actually later today for the outlook for tomorrow. We'll talk about what playbook trades were in play today, and then we'll get a plan for tomorrow and the rest of the week from there. All right, gang? If you have any questions, drop us a comment or send us a note. I'd love to field those, and let's see how we can end this year strong. All right? All right. Thanks. Have a great day. Peace.